that the bank is not just one entity which will look at a customer like any other business. For a bank and for a customer, there are different meanings, there are different propositions. The banker does not have to repay back the money. It is not mandatory unless and until the customer comes and says to the bank, please give back my money. At any given point of time, you need to manage the cash very, very carefully, and it should be available to the customer when the customer comes and asks from you. Good morning and welcome to the first session of Unit 3 in Management of Banking and Insurance Services. And in this session, we are going to speak about the legal relationship between the banker and the customer. Now, all of us know that this is a very, very unique relationship that we are speaking about. Why? Because the banker and customer, though they meet each other on a regular basis, and there are several transactions that happens between them, but when we speak about the legality factors, the question, the equation is entirely different. So let's go forward and understand the legal relationship between a banker and a customer. Now, moving forward, there are numerous kinds of relationship between the bank and the customer. So let's first try to understand that the bank is not just one entity which will look at a customer like any other business. For a bank and for a customer, there are different meanings, there are different propositions altogether. I might go into the bank just inquiring about something, or I might be the most needy customer looking out for a loan, or I might be just going as an irritated customer who's not worried about the banking rules and norm. I just want to finish up the loan. I'm just irritated because they are throwing me EMIs at me, they're charging me heavy interest. So what is happening is that there are too many dialogues and discussions that happen between a bank and a customer. So banks can provide facilities, bank can provide a lot of beneficiary allowances. There's so many factors that comes inside. So when you look into the dimension of a banker and a customer, the relationship is in a numerous angle. It's a multifaceted altogether. So the relationship with a banker-customer depends on the type of transaction, products and services offered by a banker. Now, when we talk about this, there are different kinds of banking. We normally call as a retail banking, then we call commercial banking, corporate banking, investment banking. So many types of banking are involved in the banking scenario itself. Now, coming back to the banking scenario, we need to understand that what type of customer are you for the bank and what does the bank exactly has got to do with you. So if I am a customer who just goes to the bank, deposit money, withdraw money and come back home happily, I'm just talking about a scenario which is like any other day-to-day regulatory affair. But then if I am going to be a person who is going to look for a loan or I'm going to look for some personalized services, then my relationship with the bank is entirely different. So what we trying to understand is that the legal relationship between the bank and customer differs in several important aspects from the relationship between most other service providers. So that's why I always say, when you look at those fancy names that are being provided by banks like privileged customer, or when I say priority customer, or when I say the first class kind of customer, a business class customer, and all those kind of names which I talk about, they mean certain things for the bank because they try to prioritize people based on the need, type of services and the facilities that are being provided. But in other sectors, in other factories and the other dimensions of business like a retail, or when I'm going to talk about in terms of hospitality or in terms of healthcare, the dimensions are different. The legal relationship entirely changes. So that's why this particular topic called as the legal relationship between a banker and customer is very, very important for each one of us to understand it distinctively. Now, moving forward, what is the general legal relationship that comes? When a customer deposits money in his bank account, the bank becomes a debtor to the customer. So let's first understand that relationship. I go to the bank and I deposit money into my savings account, or I start a fixed deposit. Now the bank has accepted my money and said directly that it is going to safeguard my money, because I am having a trust on the bank and I believe that the bank is there to safeguard my money at any given point of time. So now what is happening is that the bank becomes a debtor to me. The bank is owing the responsibility of returning the money back to the customer at any given point of time. Now that's a very, very important factor to be noted. Point number 2, no new contract is created every time there is a new deposit, as the account is continuing in nature. I have a savings account. With that savings account, I'm able to add on certain features, add more deposits, add more factors to it. So there is going to be no new contract. The one contract or the one binding factor that we have with the bank is the savings account itself. So I had opened the savings account some time back and I'm continuing with that account. So nobody is going to come back and say that, sir, is it a new contract? Is it an old contract? Are you renewing your contract? No, we are just going to continue with the same process as far as possible. Now, the banker is not in general case the custodian of money. Now, let me make that factor also clear. So, sir, is the bank is the owner of my money? No, he's not. He says that the bank is paid into the account of the bank, not to the bank directly, and the property of the bank, and the bank has a right to use the money as it likes. So, what does the bank do is that if I go back to the banking function itself, it borrows money from customer A and gives that money to customer B. Primarily, it rotates the money from one point to another. Now, what is the bank trying to do is that since you have deposited money into my bank, I have the right to use the money according to my wish and my like. Now, will the bank be charged for that? Definitely not, because the nature of banking business itself is like that. Take money from one person and rotate it to the another person altogether. Now, the bank is not bound to inform the depositor the manner of utilization of funds deposited by him. So, we don't have to tell every time to the customer what I'm doing with the money, where the money is getting rotated, to what areas are we investing, how are we investing, what are the channels through which the money is flowing out of the bank. This is not required, this is not mandatory for the bank to go and inform to the customer. Now, the bank does not give any security to the debtor. Definitely, yes, it does not say anything. The bank has borrowed money but does not pay money on its own, as the banker has to repay the money upon payment or as demanded. Now, this is a very, very important and crucial concept. Just try to understand this. The banker does not have to repay back the money. It is not mandatory unless and until the customer comes and says to the bank, please give back my money. I need my money right now. I need to take out that fixed deposit altogether. So until then, the bank is not going to come up voluntarily and throw back the money on the customer. But on the other hand, the bank has a right to ask the customer clearly in terms of repayment of the money, repayment of loans, or any other factors. So that is where the legal relationship is slightly different in terms of bank versus the customer. Now, the bank's position is quite different from the normal debtors, which is 100% true. Why? Because on the other hand, when a bank lends money to the customer, the relationship between the bank and customer is reversed. Now, bank will become in charge of money and the customer will become its debtor. So when anybody is taking a loan from the bank will take the upper hand and the customer has to oblige to the bank's rules and regulation. Now, then the bank takes the position of creditor, customer becomes the debtor. Borrower has to execute the document before the bank, before utilizing the money, and borrower has to listen according to the banking rules and regulations that have been prescribed very, very clearly. So what is important, what is mandatory for all of us here to think, analyze and understand is that bank is only trying to play a position according to the need and according to the wants of the customer. Bank itself does not get into a legal relation by itself directly, or bank does not dictate terms just because you are walking into the branch. Bank is there to help you in terms of loans, in terms of deposits or accounts, but bank will ensure you money only when it is required, only when it is needed. Followed by the relationship between a customer and banker can be that of a principal and agent. Now, when we go back to our commercial law altogether, we know what is the relationship between a principal and an agent. Agent is defined as a person who's employed to do any act for the principal or represent the dealings of these third persons. The person to whom such act is done is represented as the principal. So according to the need of the bank and the agent, now this is how they start functioning all together. In acting on instructions to make periodical payment, transfer of money from customer's account to another, to collect the checks or bill, bank acts as an agent to the customer. Now most of us know that when we have to make our monthly bills payment, it might be a water bill, it might be electricity bill, any kind of amenities bill, the standing instructions that are being given by the customer is being executed by the bank. So here bank will become an agent to the customer. On the other hand, now what is going to happen is that when the customer is borrowing loan from the bank will become a principal and customer will become an agent. At that time, customer has to listen to what the bank is saying. Followed by prima facie, every agent for reward is bound by an exercise skill of carrying out the instructions of his principal. The standard of care is expected from an ordinary but the prudent banker, that's not of a detective. So, what does a bank typically try to do is only try to understand the nature of business, understand the repayment and the instructions all together. They will definitely try to exercise their brain, their knowledge, their skills and expertise in terms of giving loan to a customer. They don't want to give it with a blind faith altogether. Again, they're not going to do a detective job here perfectly, but what they're going to do is that they are going to exercise their knowledge, their skills, their ideology before giving out. So they're going to think whether this customer is really worth giving that loan or should we stop it from giving that kind of loan. Followed by the undue influence that comes between a banker and that of a bank, or the customer and that of a banker altogether. Now let us understand here that when we talk about this undue influence, we need to understand what is the basis of an undue influence factor. Undue influence is something where I'm trying to put a pressure on you, trying to do something which you do not like, or I'm trying to force you to get you into an agreement, get you into a contract. Here, the relationship between a banker and customer will not generally give rise to a presumption of undue influence. Bank will never force anybody, any of the customers to do anything. They are not going to pressurize and say that, sir, you have to open a savings account. You have to have an account with us. You have to create a fixed deposit. You have to follow a recurring deposit. Bank is not going to throw any pressure on any customer at any given point of time. That's why even in your mobiles, when you receive message, says the bank says very clearly, please do not share your OTP, please do not share your PIN numbers or anything with anybody. Bank is only a directive person. Bank is not going to act as a person who is going to force upon the ideas or opinions on you. Followed by, in ordinary course of banking, commerce altogether, a banker is allowed to explain the nature of proposed transaction, the proposed one, without laying himself open to the charge of undue influence. So let me just tell you, if I go to a bank today and I want to borrow money for constructing my home, which means I'm going in for a home loan purpose altogether, the banker will have the right to explain me, tell me very clearly what are all the transactions that are involved, what are all the factors that are involved, the risk that is involved, the payment cycle, the EMI, the interest and all those factors. What he will try to do, he will try to open up and explain me the nature and procedure of the banking philosophy. But at any point of time, the banker is not going to influence me by coming into force or coming into picture and telling me that, sir, you have to go in for this loan. He is not going to pressurize me at any given point of time. That's what I mean to say. So at any point of time, the banker is not going to take a responsibility that because of me things are happening, or because I will take the responsibility of giving you the loan or any other factors. He's only going to explain you, saying that what can be done. Next, the rights of a banker, which is very, very important. The banker has a right to charge interest from the customers, which is his basic thing, but the same must be kept in consonance with the guidelines of the government authorities. Now, that is very, very important. Banker cannot go and charge anything and everything from the customer. Whatever the government rules, the government regulations are prescribed, only to that extent he can go and charge the interest. Bankers will have the right to keep a certain goods with them as security against a loan, what we call it as collateral, what we call it as a security deposit altogether, because these securities can in terms be both movable and immovable property. So when you are keeping that security, that is like a guarantee that you are promising in return for the loan. Bankers will also have the right to dishonor the check of customers in certain circumstances, although it can be considered more of an obligation than a right. Why? Because in certain times what will happen is that if their payment is not on time, if they don't have enough balance, if they have not followed the rules and regulation, the banker can go ahead and cancel the check. They can stop the check saying that, sir, there is not sufficient balance. How are you issuing the check altogether? But then bank takes it as an obligation rather than as a right. They don't do it wantedly. They will take it in a position when things are not in place, followed by right to set off customers' order in order to bring equilibrium in debits and credits of the bank. Now, if your account is going to add a liability to the bank, it is going to add to a bad asset in the bank, the banker will have the right to square it off once for all and say that, sir, we don't want your account at all. We are not interested in having it because that is not setting our balance properly. So banker will have the right to cancel the account if he feels that it is not performing well according to the needs. Followed by the duties of the banker. The foremost duty of a banker is to assure safety to its customer and keep the funds at availability. Now that's the paramount duty, which I will say, because he needs to handle cash with utmost care and with the utmost caution. So at any given point of time, you need to manage the cash very, very carefully, and it should be available to the customer when the customer comes and asks from you. Day-to-day transaction must be kept safe by the bankers, and they should show the same to the customers. Also, the banker cannot reject the request of customer to honor their check or as well as provide them with money at that time. Now, so whenever the customer comes into the bank, they ask for money, they ask for the submittance or the revival of their deposits, or they want to transfer money, they want to take it out. Whatever factors the customers are asking, it is the duty of the banker to serve the customer. Discontinuance of the relationship. When can a banker go forward and say that, sir, we are stopping the relationship? The first thing, if the customer is not satisfied, obviously I am not happy with the banking system, I can just go ahead and say that I don't wish to continue with this branch or with this bank anymore. If there are chances of winding up of the bank where the customer is alerted, like in the case of Punjab Maharashtra Cooperative Bank or Lakshmi Vilas Bank or Yes Bank, the customers are agitated, they are afraid, they don't want to continue banking there anymore, they feel that this bank is involved in a lot of risk, let me pull out my money and go to some other bank. If the rules and regulations of the bank are such that the customer is not able to understand, he feels too much pressurized, too much of taxation there, so he doesn't want to continue. In cases there are court orders, tribunals, legal formalities and systems running around, then I don't want to be a part of the bank. And last but not the least, in case of death or mental instability of the customer, automatically the relationship gets completely truncated. So these are the scenarios where the banker and the customer can discontinue the relationship and say a goodbye to each other. With this, I come to the end of this session. I believe that all the information provided in this session is of a great help and resource to you. In the upcoming sessions, we will be talking about the nature of banking business and how it makes a sense in terms of driving the economy. Until then, stay tuned, stay blessed, and stay enlightened forever. Thank you once again for joining me today.